Venkatraman Anantha-Nageswaran, Chief Investment Officer at Bank Julius Baer. He joins us now live from Singapore. Good morning. Thank you very much for joining us today.
You're welcome. You're welcome.
What of interest do you expect to come out of these Sino-US talks today and tomorrow?
Well, I think there will be vague promises of some action and currency reforms on the part of China. Given what has happened to the euro recently, one doesn't expect China to commit to any specifics in these 2 days talks.
Do you think China's going to hold off on tighter policy because of what we're seeing in Europe?
Yes, indeed. I think China is going to delay its tightening, or in fact, in the next few months, it might even end up reversing it, not only because of Europe, but also because of fears that it might have over-tightened in response to property sector bubble. Therefore, either interest rate hikes or currency adjustments are not on the card at this point in time.
Could the euro debt crisis, though, Dr. Van, could it really derail China's economy or the Asian growth story?
No, I don't think so, because at the end of the day, the structural fundamentals in Asia are far better. Public sector and private sector balance sheets are in very good shape, and there is quite a bit of domestic growth momentum. European crisis might chip some basis points of export growth and therefore of GDP growth as well. But certainly this crisis, once again, if anything, has underscored Asia's better fundamentals right now.
So you haven't changed your underlying strategy as a result of what you've been seeing in Europe in the last few months?
Not really. In fact, I would say that we have said to our clients that they should use any of these corrections to scale up into the strategic or structural bullish story on Asia. At the same time, they need to have adequate insurance against structurally growth impaired West, which means holding quite a good portion of their liquid assets in gold and also in a diversified basket of currencies.
You call it the structurally growth impaired West. How impaired will growth be then in the coming quarters and years?
Oh, I think coming quarter is not going to see a big difference in the growth rate, because the momentum that's set in the first or second quarter of 2009 is still being played out. But I think if you go into the second half of 2010, or basically the fourth quarter, or in 2011, I do believe that growth rates would be affected both in the US and in Europe, partly because of fiscal austerity in Europe, and also because the US has long-term unemployment problem this time around compared to the previous cycles.
We did see a big movement into gold in recent weeks. I mean, last week it came off a tad, but still gold near record highs. Is the commodity story still in place? When we look at the commodity spectrum, should we still be investing? And if so, which particular ones?
I think the commodity story is a cyclical story for the most part. So industrial metals probably ran too far ahead of themselves, and they probably are still elevated despite the recent correction. Crude oil looks very interesting after 20% correction, but even then I think it's more a 2 to 3 year story than a short-term story. But the case for gold rests on different factors, not because of the commodity angle, but simply because investors realize that it is a fiat money alternative and not just an anti-dollar story. The fact that gold rallied in the last 2 to 3 weeks in spite of commodity correction, in spite of dollar strengthening, suggests that investors are beginning to appreciate the underlying purpose behind holding gold.
How then?
And that's a real long-term gold story.
Okay, how then do we play Asian equity markets? Do we play it on an industry group basis, on a country basis, on a stock-specific basis? What would you recommend?
Well, I think it's more country-specific at this point in time. Thailand, for example, despite or because of blood on the streets, I think investors should be looking to add that it is a time when the pessimism is at the maximum that one should be actually buying. Growth momentum in Thailand looks very good. Taiwan will benefit for a while from inventory restocking and due to better ties with the mainland. And China's equities themselves have corrected quite substantially in the first half of the year. So these are the the markets I think investors should be focusing on. And last but not the least, India, where central bank had a policy tightening dilemma, has been bailed out by the recent commodity correction. And if the monsoons turn out to be good, I think the Indian stock market can recover lost ground. So these are the markets to focus on in Asia for the second half of the year.
Dr. Van, thanks very much for joining us today.